Vandana, let me come to you first about crude. Do you think crude will go up further from these levels?
Hi, good afternoon. So the weight is rallying today for a second day in a row. There was a strong rally, let's remember, on Friday as well. It does seem like, I mean, for Brent, it's, I would say 80 is already definitely within sight, especially as another 4 or 5 days to go before we know what Trump is going to decide on with regards to the Iran deal. And it's very likely that fears and apprehension could continue building within the market. Now, it's not that the market knows for sure what's going to happen. I think there is still a great deal of uncertainty as to how this really plays out. But right now, I think it's the worst case scenario that is being factored in. So it does seem like it could go higher. It could go down as well. Let me say that because, again, as I said, it is a lot of fear being priced in. And whatever signs we may still see in the coming days, that let's say there is a possibility that the EU and the US do let's say a supplementary deal or something, have some sort of an agreement that let's try and preserve the current deal and let's work on the other demands that Trump has through a supplementary agreement. You could see a very sharp sell-off as well. Essentially, it's going to be a very nervous market, braced for a lot of volatility.
Just in terms of the concerns, last time around when crude was going down, Vandana, the concerns were that what's happening with shale gas, how is that going to persistently, impact the prices? Is that gone away?
No, there are definitely some bearish factors. I would say they are a bit in the wings right now. U.S. production is indeed growing quite strongly. We at Vandana Insights, we were crunching some numbers just last week, and so far from what we can see, based on what the shale producers have said with regard to their first quarter results, as well as the first 2 months of monthly production data that we have in hand, the rig count numbers that have been growing quite strongly through April, it does seem to be on course to rise by almost 1.4 million barrels per day year on year that the US EIA has predicted. So we're definitely going to see the strongest ever year-on-year growth in the US history in US production. What's happened right now is that the market is overly focused, obsessed even, with all the real and feared shortages. So we talked about Iran. That's a feared shortage. There are some real shortages happening as well, especially in Venezuela. And over the weekend, we saw some more PDVSA, the Venezuelan oil company, getting into more trouble with foreign oil producers, this time ConocoPhillips. A few weeks ago, it was Chevron. So the market has a pretty dim view of Venezuelan production going forward as well. It's in a very steep slide. And combined with that, strong demand growth globally and OPEC, non-OPEC cuts. So the market right now, it's very hard for the market to see beyond the bullish factors, but certainly there are some bearish elements on the scene as well.
Let's get in a view as well from Kun Go, who's with us on the show. Thank you for joining in. And Kun, wanted to understand what you think these fresh sanctions would potentially mean. Would it remove some of Iran's overall crude oil supplies from the global market, help, tighten the overall balance between demand and supply, and to some extent even support crude prices?
If that were to happen, we could see further upside in crude oil prices for sure. There's certainly a geopolitical risk premium currently being priced into crude. And if we do see sanctions being reimposed and Iran's oil supply is getting taken up, they'll further tighten the demand-supply balance, and we could well see crude continuing to be supported higher.
The currency as well continues to remain one of the biggest worries for us. What is your outlook as to where the rupee is potentially headed and the biggest factor that's going to drive the currency? Kun.
Well, there's the external factor, and which has been discussed earlier, oil prices being the main one, the stronger U.S. dollar rebound that we've had in the last few weeks. That's also another external factor that's putting pressure on the Indian rupee. But domestically as well, there's a host of domestic issues that are also not helping the rupee's fortunes. The recent banking scandal has eroded investor confidence. We've also had prospects of a more hawkish RBI, which could deliver rate cuts maybe as soon as June. So rate cuts typically tend to be negative for the Indian rupee. And even though the general elections isn't until next year, I think the upcoming state elections will also be closely watched. So all in all, India has benefited from massive foreign investor inflows last year, but it looks like the story has turned slightly, and I think the risk is that we could see some of those inflows from last year starting to unwind, which will put further downward pressure on the rupee. I think technically, now that it's broken at the 67 level, the key technical level that we all should be watching is 67.5. Near term, given how sentiment is, if we get further strength in the dollar, I wouldn't rule out a move in the rupee towards 67.5 in the near term.
Hi, this is Nayantara joining in from the New Delhi studio. Kungo, this question is for you. You're saying the next technical level to watch out for is 67.5, but whichever way you look at it, India has been the worst performing currency market now for all of 2018. Do you expect this free fall to continue, because you're seeing a recovery in the United States? A jobs report is perhaps the latest culprit for the fall of the Indian currency today. But there doesn't seem to be any good news in store for the Indian rupee, whether it's our trade data, the global triggers as well.
Well, there are some bright spots that are starting to emerge in terms of better domestic activity data. I think if you look closely enough, the latest GDP numbers have been better, and some of the high-frequency activity indicators suggest that we might see more of a recovery in domestic growth in the Indian economy. It's just that these factors are not being the main focus by markets. Instead, all these other external drivers have been dominating, hence why we've seen the weakness in the Indian rupee. At some point, I think once the rupee reaches a level that has weakened sufficiently, it might start to attract foreign investor interest once again, particularly if bonds continue to sell off. At some point, it will reach attractive levels again for foreign investors to have another look. I think we're just not quite at that point right now yet.
Okay, at this juncture, I'd like to thank both my guests for joining us here on Market Sense. It's a show where we talk about the long-term fundamentals as well, and how can we not dedicate that to rupee and the crude today. So we do have some domestic good triggers coming in from Main Street, and Vandana Hari talking about the crude market, making it quite clear that this is perhaps a knee-jerk reaction, maybe too early to call 75 or 80 the new normal.